Welcome back. Assalamualaikum and hello everyone. So today what we're going to do is we're going to continue with the second part of the tutorial of how to prepare a statement of cash flow using the direct method, and we are adopting the 6 steps color coded approach. As you know, we are actually at the step 3. We have done the step 3, which is to do the classification, and earlier on we have also started with step 4, and there are altogether 6 steps here, right? So if you look, the step 4 is what we were doing, which is to reconstruct the T account. So far we have not yet reconstructed the T accounts, and we are dealing with the cash flow from financing activities. And these were the place that we stopped earlier, right? Where in my first video, if you have not yet watched that, you can check down the description below. I put the link to my first video discussing on the same question of this preparation of cash flow using direct method. So let's look at the our review or our tracing of our financing activities to see whether there is some cash inflow or cash outflow. For the dividend just now, as I said, it was directly given. So now we are going to look at the redemption of the preference shares. For redemption, you are informed it was redeemed out of profit. So let's look at the redemption account here. It was redeemed out of profit, and you are informed that the reduction is due to the redemption. Now, for your information, if there is a redemption, normally there will be an outflow of cash to pay to the preference shareholder. So if you look at what you have here, I prepared for you. What you need to do first you need to go and open up your account, put the balance, right? Put the balance beginning of the year, and then put the balance at the end of the year. Where do you get the balance? Is directly from the account, right? And you can see that we want to check what are the redemption here. So this is what we were trying to check, right? So we're going to put the tick here again, just copy, and we paste here, because we are doing the checking as well, so that you won't leave anything without being reviewed and checked. Okay. So after you have done that, you put the correct balances there, with the beginning and the ending balance. Put it to the correct side. The beginning balance or the opening balance should be put on the credit side, and the ending balance should be put on the debit side. And then the difference between these two balances, since there is no information given, you would assume this is due to the redemption. And the redemption, as I said, you are going to debit the redeemable preference shares, and you're going to credit the bank account. And this is under, again, this is under your financing activities, and this is giving some outflow. So credit bank, right, and debit redeemable preference shares. So therefore that will be shown here, where in your cash flow from financing activities. When we say redemption out of profit, what does that mean? Redemption out of profit means you're going to transfer an amount equal to the amount being redeemed here, which is 60,000, from your share capital to the retained profit. So let's look at the share capital balance. How much do you have? You have this, right? Okay, balance, you can check that. Where do I take this? Again, you can go and check your statement here, share capital. Okay, so there is a decrease of 60,000. That decrease of 60,000, yep, were the changes here, right? Right. And therefore, the beginning balance, let's just check that. How much was the beginning balance? 1,001. And the ending balance is 1,160. So therefore there was a transfer from the retained profit to the share capital. So the transfer means debit retained profit and credit the share capital. So when you debit retained profit, credit share capital, this is nothing to do with the cash, right? It's just a non-cash transaction. And we also need to check if there are anything here, nothing, right? So the total of this account would be 110. And you need to open up your retained earnings just to show some detail on that. Here I prepared for you just to show the part that relates to the share capital. So this is the one related to share capital. I bold it for you. So you go and credit the share capital and you debit the retained profit. That means that is redemption out of profits, right? And the rest of the thing actually you do not need to do, because this one you normally do this retained earnings to find the dividend payable, but you can also have a go and look at how actually dividend payable can also be determined. So this, I'm just going to put it like this, just going to show you the part that relates to our question only, right? Next, you would see that our there are no movement of share capital in the ordinary share capital that relates to cash. So we are done with this. Are we done with that? We need to check, yeah, because we have one more item, if I'm not mistaken, which is our retained earnings check. Now we need to check on the debentures. So in the information, if you can see here in the statement of financial position, there were no changes in the debentures balance. No changes. It's still 200 and 200,000. If you check at the bottom here, also no information regarding any issuance of debenture. So there are no movement of cash. When we talk about net movement of cash for the debenture, not even a cash inflow or cash outflow. So that has done. We are done now for our cash flow from financing activities. You can now total up. So to total up, you will total up these two rows only, right? So that will be the total of cell I30 and total cell I31. So that gives you these figures, which is the net cash flow from financing activities. Okay. We color code that as. You don't have to do this here if you don't feel like doing, but I'm just showing you to make things more interesting when you have colors, right? It's very colorful, right? Next, we go on to our cash flow from investing activities. Remember, investing activities is about any movement in your non-current asset and long-term asset like investment. So here you only have one item, which is property, plant, and equipment, together with its accumulated depreciation. So if you check at the bottom of the information here, you are informed that the increase in the property, plant, and equipment was due to the new acquisition, meaning that there was an outflow of cash during that year that has caused the increase to the property, plant, and equipment. There are cash being spent, right? Another one that are given here, the information on depreciation. Yeah, information on depreciation are non-cash. I use this color for non-cash, which is the turquoise. The blue color will be for our investing activities, just to make sure that you see the different color. So let's put the how much is the acquisition. So no information given regarding any disposal. So if you check your property, plant, and equipment here, right, you can see that there was an increase of 490,000, and the accumulated depreciation also an increase of 170. So for the accumulated depreciation, the increase is due to the current year depreciation. But for the property, plant, and equipment, since there are no information, the increase should be assumed, as we have been informed at the bottom here, right? That was due to purchase of new property, plant, and equipment. So this 490,000, we shall put it here. Yeah, we put it here. We put purchase of property, plant, and equipment, and this will take this 490, but make sure you put an outflow sign there, negative, or just put a minus sign. right? For the accumulated depreciation, it won't be reported here because those are non-cash transactions. So you don't have to include depreciation here, right? But that depreciation information might be relevant for us to go and focus on our operating activities, right? Next, we are done with this. Okay, when you are done, just put a tick there. Next, accumulated depreciation. This one will have to be adjusted later, so I will not put a tick yet. Now, investment. You can see that there is also some changes in investment. There was a growth in investment, so the increase in the investment should also be assumed due to the acquisition of more investment. So you have more investment, meaning that you purchase more investment in that company. So that how much is 100,000? We take it from here. You don't have to open up the account if the things are direct. Okay, one more item which are also related to investing activities is investment income, also known as income from investment. This can either be from interest income that you receive, meaning that the one that you debit bank and you credit interest income, or it can also be from the dividend that you receive from the company where you invested in, and where you receive the money, you debit bank and you credit your dividend income. So in your question here, you are given some investment income. This one, right? And investment income is actually an investing activities. So that investment income, you need to check in your asset section here if you have any dividend receivable. Should you have any dividend receivable or any other adjustment relating to accrued dividend, that means you need to go and open up the T accounts, or you need to find out what are the balancing figure, because you want to find out what are your dividend received. But for today, the dividend received is actually the dividend that you earn here. So it's exactly the same. So that was an inflow. So you will now add up. There are no more. Yeah, of course, I said just now, the depreciation would have to be used later. But at the moment, we are done with the investing activities, and you should get an outflow of 90,000. Now we move on to our cash flow from operating activities. Okay, here I have put some reference for you. If you want to see, I can put it here, and I just open it up for you. Yeah. These are where I referred to in case you need some reference to get the information. This one was directly from SOPL. This one was from SOFP or balance sheet, SOFP. This is from working one. Yeah, if there is working, but here no working one, but this is actually info. I put here info number. Let me check. Number 5. So this one is info 5. Okay. And this one is info 5 and info 4. Okay, info 4. Doesn't really matter, just for a cross reference so that you can check. Okay. Now we go to the part that is related to cash generated from operation. So let's see what you have here. Okay, the thing that you need to find out here is you need to find out if there is any interest paid and tax paid. To work that out, you need to check the information given. So if you see here, there are no information regarding tax, nothing. So there are no information regarding interest. Nothing was informed here regarding what was paid. So to get your figure done and put it in your statement here, this part, remember these are all from operating activities, and we're going to put the color as purple, right? Because operating activities, I color code that as purple. Now, you can now open up your taxation account. I've done that here. Let's check the taxation account in this working. Okay, the first thing that you should do is, of course, to put the title of the account. I think you are aware of that. Put the balance at the beginning. If you have a tax recoverable, the balance should be at the debit side, but this is a tax payable. And the end of the year, it has a credit balance CD 70. And you need to find out this, which is how much is your cash paid related to the taxation. How much do you use your operating cash flow to pay taxation? To do this, you need to go and find out what are your tax charge during the year. Tax charge during the year is given where? Is given in your statement of profit or loss. So let's go to the statement of profit or loss and see how do I get that 200,000. So that statement of profit or loss is here. So this taxation, yeah, these are all operating activities. So these are purple here. These are purple, right? So those taxation 200,000, it should be put in your taxation account. After you have done that, right? After you have done that, you will get your balancing figure in your taxation account. If you've done it correctly, make sure you put it correctly. It should be on the credit side. If you do that, you get your tax paid to be 190,000, and this should be part of your investing activities. I color code too much here. Okay. Next one is for the interest. We're gonna find out the same thing. We're gonna do the same thing, which is to find out what are our interest payable. Earlier we have already checked this, right? For our tax, we put the balances just now and we get our taxation paid. Now we're gonna do for our interest. For the interest, you have accrued interest. Accrued interest means the interest that you incurred or you need to pay but you haven't paid. So beginning of the year there was none, but at the end of the year you have 100,000. So put that balances in your account and you need to find out how much do you actually paid. So if you can see here, that interest is 130,000 shown in the SOCF, in your SOPL, sorry. The way that you did for your tax account just now, you should repeat that for your interest. So this is how you do it. I show you. Yeah. First put the balance. If you can check again the question, there are no balance at the beginning. There was a balance at the end. You can check your account just now. Right. And then your SOPL is showing you what was charged or the interest that was your charge for the year, which is your expense, right? Right. Same goes here. Right, so you have put that. After you have done that, the balancing figure here will be your interest paid. Okay, so those two figures must be shown in the cash flow from operating activities as an outflow. So you should report the same amount that you have in your T account here. So you can see here it was 190 and 30,000. Next, we go on and find out those things that are making the difference for direct and indirect method. Is if you can still recall, the indirect method starts with the profit before tax or net loss that you have during that year. But this is a direct method, so we will have to settle these three things here. So we're going to do this first, which is cash receipt from customer. Cash receipt from customer will be the one that you collect from your customer, from the services that you have provided or from the sales of good that you have made earlier. And those collection from them is what you are interested. To do this, yeah, you will do step, we have done step 4 and now we are doing step 5. Which is to do things on investing activities. Investing activities. And this is not investing. This is to do things for cash flow from operating activities. So step 4 is to find out cash flow from investing and financing. Step 5 is find out cash flow from operating. So you need to go and adjust out all the non-cash transaction as usual, all the non-operating items. You need to review all the accounts that you have in the soft B. Yeah. Of course, now you are left with the operating activities, right? Those operating assets and operating liabilities. So you review all those accounts given. You're going to adjust out the affected T account. So we are talking about the affected T account, which are under operating activities, right? Under operating assets and operating liabilities. So you're going to finalize how much is the amount that relates to cash payments and cash receipts that relates to the item. So let's look at the first item. We're going to or go and construct our accounts receivable. So if you construct your account receivable, you're trying to find out the how much is the amount received from your customer. So you're going to put the balance carried down and balance brought down to the correct side. Then you're going to put the credit sales. I put the notes there to the debit side of the account receivable because sales are credit, account receivables are debit, right? And you're going to close off the account and you get the balancing figure. So do that first. Put the balance at the beginning. Put the balance at the beginning, okay? Where do you get the balance? The balance is from your statement of financial position given. So you now can do that. And then you go and get your sales. Where do you get the sales? The sales is from the statement of profit or loss. Okay. So then with this, okay, done. Next. Same goes for the sales. You need to take the credit sales only. You cannot take your cash sales because cash sale has been collected. So we are going to focus only on the collection from our customer out of the credit sales. Okay. I've already ticked things that we have done. If you notice, I'm doing this. We have done this, right? So most of the things we have done. So take the sales, put it there. So the thing should be repeated for your accounts payable as well. So now you can find your cash receipt from your customer. And your cash receipt from your customer, the balancing figure is going to be 5040. 5040. And this is 5040 here, which is in your statement of cash flow. So we have this. Yeah, we have this. Next, can I find out what are the cash payments to supplier? Okay, some question will give you the cash payments to supplier directly by working out the trade payable account. But in this question, if you check your information, you can check that in the statement of profit or loss. You are given the cost of sale. You can make use of this cost of sale. And there are nothing related to purchase account. So if that is the point, what you need to do is you need to follow my suggestion here, is that you're going to set up your inventories account, right? You're going to set up the inventories account first to find the purchase. And then after you have found the purchase, you're going to find out what are the cash payments to the supplier. So you're going to reconstruct that by reconstructing your inventories account. Sometimes you can also make use of your cost of sales, but I'm reconstructing that inventories account. So put the balance, to take the balance there, put the balance at the end of the year. Yeah, here. Put the cost of sales here. Where is it? You take this now from the statement of profit or loss, sorry. And then you will get your purchase. So I'm going to put some color for purchase to differentiate. I'm using some yellow. I'm using yellow to show you the purchase. And that purchase, right, is given in the inventories account when you have the balancing figure, right? And now you put that in your trade payable. you put it here. Okay, the purchase, it must be the credit purchase. It must be the credit purchase because cash purchase is not in the trade payable. Put the balances. Put the balances. So those balances will be from the, let me show you here. Yeah, we have done the one for receivable, right? So you don't have to do that. Yep. Now I'm doing things for inventory just now. So inventory, I've taken the balance. Yep. Oopsie. Okay. And I'm taking the balance for trade payable. So beginning, ending. So take this balance, put on the debit credit side. This one put on the credit side. Okay, do that with me so that you can understand things better. After you have done that, you put the balance correctly, right? Okay. You'll be able to get the cash payments to the supplier. The cash payment to the supplier. And that cash payments to the supplier will be an outflow. 2395. Yeah, cash payments to the supplier. How? Go and total up the credit side. And then find out what is the balancing amount by taking the total debit minus all the debit entries. Next is to find out what are the last item. We are almost done, which is cash. This one we are done, right? I put the purple there. You're going to find out this, our last item. And we will should get this figure for your cash generated from operation. So meaning that now this is the last item that we're going to find. Cash payments to employees, meaning that the salaries that you pay to the employees and any other operating expenses. So this one will not include finance costs. It will not include taxation, will not include the interest paid. It will just include the operating expenses. So I've set up the operating expenses account here for you. You can just have a go here. So what you need to do, if you have any balances accrued, you should put on that credit side. Any balances that were prepaid, put on the debit side. Any accrued credit balance should be on the debit side. And if there are any prepayment at the end of the year, on the credit side. But in our question, if you check, no information regarding accrued or regarding the prepaid expenses that relates to our operating expenses. So we are done with this. Yeah, we are almost done. We just want to relate to the depreciation now. And let us look at the information given on depreciation that might be relevant to the operating expenses paid. So here, if you check this one, the included in the admin and selling expenses were depreciation. So in your admin expenses, it has included the non-cash transaction. Now you need to go and adjust out. Adjust out means to go and remove from your expenses. It has been included. You're now going to exclude that. So this is under step 5, where I put here adjust out the affected account with the non-cash transaction, right? So this one is our affected account. So the total expenses coming from distribution and admin is 1450. How do you get 1450? Is here in the statement of profit or loss. This one, this two, this two color there. Okay, that one you total up, right? This one I also taken already, done, mostly done. Now you total up 1450, and what you need to do is you need to go and remove the depreciation that was in that item. So if you were to remove, right, first you go and put this here because it will be debited to the statement of profit or loss. So here means that in the statement of profit or loss, these are what being charged. So you're going to put the depreciation. Where do you get the depreciation? The one which is the different that we have done much earlier. This one. This one, this item here. Okay, that item there, you will include in your expenses. Not include, you will exclude actually. Sorry with that glitch there. Yep, you put the depreciation. And now you can total up here 1450 minus 170. So 1280 is the operating expenses paid, meaning that that is the payment to employees and other operating expenses. So we'll go and transfer that 1280, transfer it here. Put it as an outflow. So now you have the total for all your activities. The cash generated from operation is 1365. Yep. And your net cash flow from operating activities, if you total up correctly, it will be 1145. And these are where the reference comes from. Just to show you, you can check later. I have numbered my working. Later you can check the answer, yeah, why the working is being numbered, so that for easy reference. And then if you total up this, this is what I call section 1, right? If you watch my videos, this is section 2, this is section 3. If you total up, it should come back. If you make the total, you can do that here. You can just do some sum of this, all this, and it must come back to the figure here. So it is 105. These 105 are from here. So to cross check what you total up from the 3 activities should come back to the same figure. And with that, you are done with your statement of cash flow using the direct method. And this is how you do it step by step. And the last thing to do is step 6 that I've forgotten to highlight. So step 6 is for you to review all and transfer all the relevant amount that you have finalized. Okay, in all the T accounts, if it's necessary, all the net changes, we have done that, everything in the statement of cash flow template where applicable. Complete the template, go and do the subtotal, I've done that. Reconcile the total, I've done that. Yeah, all the A, B, C, I've done that. With that, I thank you for watching. I hope this really gives you a very good perspective of how to answer a cash flow question for direct method. And we'll go on by doing more questions later with a more complex situation. With that, I thank you for watching. I'll see you when I will see you. And have a nice day ahead. Assalamualaikum warahmatullahi wabarakatuh.